Welcome to today's What Moved the Market show. I'm your host Prem. It's Tuesday, December 3rd, 2025, and here is everything you need to know as the markets close for today. Indian equity markets traded on a weak footing today as investors showed caution ahead of the Reserve Bank of India's critical monetary policy decision coming this Friday. The Nifty 50 closed at 25,986, shedding 46 points or 0.18%. The Sensex ended at 85,138, virtually flat with only a 31-point decline. However, the Bank Nifty painted a weaker picture, sliding 407 points to close at 59,273, representing a 0.68% drop. The day saw profit booking persist across most sectors after the market's recent rally, though some pockets remained resilient. On the currency front, the Indian rupee came under significant pressure today, hitting an unprecedented all-time low of 90.14 against the US dollar during intraday trading. The rupee eventually settled at 89.88 at close, though this weakness signaled deepening concerns about capital flows and external pressures that continue to weigh on sentiment. The IT sector emerged as the clear winner today, powered by strong gains in Wipro, which surged 1.93%, followed by Tata Consultancy Services up 1.44% and Infosys climbing 1.24%. These technology majors benefited from relative stability in global tech sentiment and positive sentiment following their earnings. On the contrary, the day belonged to losers as well, with Max Healthcare Institute bearing the brunt of selling pressure, falling 2.91% after profit-taking following its recent rally. Tata Consumer Products declined 2.25% as defensive sectors faced headwinds. Adani Enterprises shed 2.14% despite earlier strength in the group, while Bharat Electronics dropped 2.03% and Shriram Finance lost 1.83%. The broader weakness in financials and discretionary stocks reflected risk-off sentiment and portfolio rebalancing ahead of the major monetary policy event. On the technical front, the Nifty 50 tested key support levels near 25,950 and successfully held the 26,000 zone that had acted as a crucial demand area over the past week. The index intraday touched a low of 25,891 before recovering moderately into close. For tomorrow's session, the immediate support zone lies at 26,000 with the deeper support at 25,855. Resistance remains capped at 26,135 in the near term, followed by the more significant hurdle at 26,314. Bank Nifty meanwhile has slipped below the 59,500 zone and now faces immediate support at 58,750 with a critical support level at 58,175. Resistance for Bank Nifty is placed at 59,528 and any breakout could target 60,114, which marks the index's all-time high. From a sectoral standpoint, the Information Technology Index led the charge, rising 0.45% and providing much-needed stability to the broader market. In sharp contrast, the FMCG sector emerged as the worst performer, declining 0.61% as consumer discretionary names faced profit booking. The PSU Bank Index weakened marginally by 0.35%, despite some expectations of support from a potential rate cut. The auto sector remained muted with a minus 0.22% change, reflecting concerns over demand and a potential shift in consumption patterns. Pharma held relatively stable, edging up 0.20%. The key macro event for today was the commencement of the Reserve Bank of India's three-day Monetary Policy Committee meeting, scheduled through December 5th. This is setting up to be one of the most closely watched policy decisions of the year. Markets are divided on whether the RBI will cut the repo rate by 25 basis points to 5.25% or keep it steady at 5.5%. Inflation has moderated to record low levels. The headline CPI touched just 0.25% in October, well below the RBI's comfort band, while strong GDP growth of 8.2% in the second quarter presents conflicting signals. Most market participants expect the RBI to err on the side of caution and maintain the rate given the robust growth trajectory. Additionally, SEBI has announced significant futures and options trading reforms that are taking effect from December 6th. These include hard position limits for index options traders and the introduction of a pre-opening session for derivatives trading starting December 8th. These changes are designed to improve market microstructure and protect retail traders from excessive exposure. In the commodity complex, crude oil prices declined marginally, with Brent crude settling at $62.36 per barrel and West Texas Intermediate at $58.97. The weakness stems from peace talks between Russia and Ukraine that offer the possibility of lifting sanctions on Russian oil, though negotiations have stalled. On the precious metals front, MCX gold futures surged, closing at 1,30,769 rupees per 10 grams, gaining 0.78%. The star performer was MCX silver, which hit a fresh all-time high, soaring 1.72% to close at 1,84,727 rupees per kilogram. This strength in both metals is being driven by the rupee's weakness and continued safe haven demand amid geopolitical uncertainties and elevated global tensions. Speaking of geopolitical developments, ongoing Russia-Ukraine peace negotiations took center stage today. Talks between Russian President Vladimir Putin and high-ranking officials from US President Donald Trump's administration concluded without a breakthrough, which dampened hopes for a quick resolution. While a full agreement could have eased sanctions on Russian oil, the failure to reach terms kept uncertainty alive in global markets. The protracted nature of these negotiations continues to support gold and silver as investors seek shelter from potential escalations. Additionally, the weak rupee has added to inflationary pressures, making imported goods more expensive and potentially keeping crude oil and metals elevated in rupee terms. Looking ahead to tomorrow's trading session, technicians see a consolidation scenario playing out. The Nifty 50 is likely to oscillate between the 25,850 support and the 26,200 resistance. A sustained break above 26,300 would open doors toward the 26,500 psychological level and beyond. However, a breach of the 25,850 support zone could extend weakness toward 25,700. For Bank Nifty, the consolidation zone is expected between 58,500 and 60,100. The monetary policy decision on Friday remains the wild card that could spark significant volatility in either direction, so expect traders to remain cautious and take defensive positions until the RBI governor makes the announcement. Your actionable takeaway for the next session is this: IT stocks have shown relative resilience and are trading near support levels, making them attractive for tactical long positions on any market dips tomorrow. With the RBI decision days away, avoid taking large leverage bets in the derivative space and stay hedged. If you're a swing trader, watch the 26,000 zone closely on the Nifty. A clean hold could signal fresh buying. For conservative investors, this consolidation phase presents an ideal opportunity to accumulate quality stocks on weakness before the next potential leg of upside. Do send in your trading strategies and questions through our social media channels. Stay tuned for tomorrow morning's wrap and make sure to catch the full market coverage when the RBI makes its decision on Friday. Thanks for tuning in.